Hi, this is Zam here with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 9th of July. Starting off with the FTSE, and here we're sandwiched between that May resistance line there, the 50-day line 82.50, and the floor of the rising trend channel from October around 81.40. Obviously looking for a breakout there. If we break through 82.50, then looking for 83.71, the June peak. Otherwise, there's a risk if we break back below 81.40 to head back to the 8,000 area. But at the moment, probably just about favouring the upside, even though it looks rather difficult just on the basis that the 50-day line is rising. RSI just below neutral 50, so that explains the dithering that we have at the moment. Moving on to the DAX, where we were waiting for it to break the May resistance line. Obviously, it hasn't done that, so we're back near the floor of the rising trend channel there from back in September. That's around 18,300. Still looking for 18,700 to break and journey towards the highs, all-time highs near 19,000. RSI flopping over at 52, and that suggests that we have a risk of a test of the 18,000 area, even if we then head back higher again. Moving on to the Dow, and here the market obviously trying to look at 40,000. We're getting a little bit sheepish every time it gets near there. Got the floor of that rising trend channel from the end of July last year, 38,900. Hopefully we'll stay above that. RSI in the upper 50s, which is in the right place. So there should be more attempts at breaking towards 40,000. Obviously the top of the channel there from last year as high as 42,000. But I suppose that would be a best case scenario target for the end of next month. On the downside, hopefully nothing lower than 38,000 if there is a rug pull for that market. On to Bitcoin, where we're trying to work out which way the market will go at this rather delicate stage. It looks as though we've got a slight bear trap from below the 56,000 area, which was the May support. We bounced, or had two attempts at bouncing at that February support line there, 53,000. But what's missing here is an end of day close back above the 200-day line, still rising there, 58,800. If we get through that, then there's a chance of retesting the 50-day line, 65,000. Bit of bullish divergence there as well after the bear trap effect as well. So at the moment, one would just about put the favour in terms of a move towards the low 60,000s. Moving on to gold, and here we had a good spurt at the turn of the week, but unfortunately we've managed to fall back below the 2400 level, failed that area. Still got the main support here, 2330, the floor of that rising trend channel from December, and we still have a rising 50-day line at 2355. Hopefully on any pullback we will find support there or thereabouts. I suppose now what we need to get up to the top of the channel there at 2600 is a decent end of day or end of week close through 2400. Moving on to the stocks, and most of them are, well, at least a lot of them are a lap of honor. Here we've got a V-shaped bull flag for Avacta. Previously we're looking for 67 pence, which was the top of that February gap, and then above that looking for 88 pence, and that was suggested maybe as soon as the end of this month. So we're on track for that at the moment, but just don't want to see any end of day close back below that 67 pence level now. Hopefully we will not get that. Moving on to Afentra, and here situation is ongoing progress within this rising trend channel from back in September. Extended bear trap rebound from below a rising 50-day line at the end of last month, and current situation looks as though, well, we've also got a U-shaped formation in terms of the post-June price action that suggests that 69 to 70 pence is pretty well nailed on by the end of this month. Hopefully that timing is correct. Ideally, there's no end of day close back below the 50-day line and the floor of the channel there at 55 pence. Next up is Cadence, which has upgraded its a mapper project by quite some margin, and you can see we've got a bear trap gap reversal. We've also had bullish divergence there as well with the lower low for July, but higher RSI trace. So basically everything we want in terms of a recovery situation here. The top of the falling channel there at 5.35 pence, and we're looking at that over the next couple of weeks, or the way things are going, even sooner than that. A win today would be an end of day close back above the 50-day line at 3 3/4 pence. Otherwise, ideally, we obviously stay above the April floor, 3 1/4 pence. Moving on to CapEx, which has lived up to our dreams in terms of breaking out from the 0.18 area, the previous target. We've got the next target there around now up to 0.44, actually, the top of that rising trend channel base, and looking for that by the end of this month, while we remain above the initial July resistance around 0.25, maybe on the tightest stop loss you'd be looking for the market to remain above 0.26, which was the late June peak. But we gapped up there through that resistance line there, so looking pretty strong at the moment. Onto Deltic, which has a bit of charting magic at the moment as well. We've got a U-shaped turnaround here and breaking neckline resistance around 8.35 pence above that, looking for the 50-day line at 12 pence by the end of this month. There's also quite a strong amount of bullish divergence in the RSI window after that lower support area for the start of July. So looking very good indeed there. Stock that nobody really looks at is up next, which is Dianomi, and here got the chance of a rising trend channel base, like the gap close signal, the bear trap gap close signal that we had back in January, but obviously had to wait a long time for some action here. 60 pence the initial target, and obviously hoping for rather more, but let's see if we can at least stay above the 50-day line there at 48 pence. On to Guardian Metal, where I think everyone and their mother's claiming the credit for this particular rally. We've hit our 32 pence target. The initial one there was 24 pence, and we're now looking for up to the 44 pence area by the end of this month. And for those claiming the credit, actually the big buy signal here was back in January when the shares broke through 11 pence with a gap. So that is was the start of the big move there. On to another stock which has been a fantastic IPO, and that is Helix Exploration. Here you can see that we've got this rising trend channel. We were looking for a break of that resistance line there from last month. That was around the 21 pence level, and above 21 pence, looking for 32 pence. Almost like a repeat of the Guardian Metal situation, and looking for that perhaps by the end of next month, maybe if we're lucky by the end of this month. RSI in the mid-50s, so that's exactly where we want it to be for a potential move to the upside. And also, as you can see, we've had support coming in above a rising 50-day line, which tends to be a leading indicator on the upside. Invinity is next, and here, as you can see, we've just broken out of that very long-dated one-year falling wedge pattern and through the 50-day line there at 22 pence. Above that, looking for the top of the triangle on the daily chart there from back in December, as high as 30 pence by the end of this month, or even sooner. There's also a gap to fill up to 26 pence, which hopefully will be the initial target there in the coming few days. But the other final point, I suppose, is that we've had bullish divergence here going into the latest breakout, that uptrend line there from back in April. So lots of positive ticks there on that one. On to Power Metal, which is, well, I suppose if Guardian is a buy, then one of its largest shareholders, Power Metal, is a buy as well. Looks like we've got a mid-move consolidation here after the bear trap that we had back in May below 13 pence. And basically looking for a break of a line that I'm just about to draw now, which is running through the 19 pence level. Above that, looking for the top of the rising trend channel there from this time last year, as high as 27 pence. And that could happen as soon as the end of next month, or even sooner. Ideally, we stay above the 50-day line at 16 pence in the interim. Simec is next, and here we've had decent, what looks like a mid-move consolidation. We had a previous target there at 1.8 pence, and that's now become new support. We had a golden cross last week, which is always nice, between the 50 and 200-day lines, and looking for the shares to, while they remain above 1.8, to hit that 2-year resistance line projection at 3.2 pence by the end of next month. On to Strategic Minerals. I think they're selling magnetite at the moment. Couldn't quite work it out from the RNS, but here we've got a rising trend channel after the bear trap gap reversal. In fact, that was back in January. Managed to test the top of the gap as support last month, and that's normally a very bullish sign. A break of that resistance line there from February at 0.21, and we could be up to 0.34 by the end of next month, or once again, even sooner. Don't normally look at the bigger ones or the bigger stocks, although obviously S4 was rather bigger last year and the year before. But here, rising trend channel base, top of the channel there at 67 pence, which we're looking for by the end of this month, while we remain above the June resistance around 55 pence, the initial June resistance there. Finishing off with Wishbone, which may be coming back to life after a long period in the dark. Here we've got this falling trend channel, very oversold price action there, sub 10 on the RSI scale, which is about as oversold as you can get. And hoping that we can get a decent close today above 0.7, then we could head up to 1.15 by the end of next month. Be cautious, I suppose you'd be waiting for that resistance line there to break at 3/4 of a penny before the shares are regarded as a buy. That's a falling wedge formation. That's it for me today. More updates tomorrow.